What's happening, Pulse Nation? Get ready for a rapid-fire download of the news that's moving the markets and shaping the future. The pace of change is relentless, and we're here to bring you the unmissable updates before anyone else. We've got a packed show today, diving deep into the stories that everyone will be talking about. From game-changing tech earnings to critical economic indicators and unexpected industry shifts, strap in because you're about to get the pulse on what truly matters. Let's get straight to it. First up, the AI revolution continues to dominate headlines, and the next big test for these soaring stocks is right around the corner. We're talking about major players whose earnings reports could send ripples across the entire sector. Will the momentum continue, or are we looking at a major recalibration? You won't want to miss this deep dive into the companies setting the pace. Then, we're breaking down the latest economic signals that could dictate the direction of interest rates and, by extension, the entire market. What do the latest jobs numbers mean for your portfolio? We've got the analysis you need to stay ahead. Plus, a fascinating look at how one company is strategically positioned to capitalize on major global trends, from AI energy demands to shifting trade policies. We'll uncover the hidden opportunities that could be your next big win. And finally, we're examining the latest moves in the retail and housing sectors, looking at how brands are navigating consumer sentiment and economic headwinds. We've got it all, so get ready to stay informed and get ahead. Don't go anywhere, and make sure you're subscribed and have that notification bell on so you never miss a beat. The next AI stock test is here. Get ready, because the market is about to face its next major checkpoint for AI-driven stocks. With the artificial intelligence sector continuing its meteoric rise, all eyes are on upcoming earnings reports from key industry players. These aren't just routine financial updates. They are critical indicators that could determine the trajectory of the entire AI market, potentially validating the current euphoria or signaling a much-needed correction. The performance of companies like Broadcom and Credo Technology will be under intense scrutiny, as investors look for confirmation of sustained demand and innovation in the AI space. Broadcom, a semiconductor giant, is crucial for its role in supplying the foundational technology that powers AI advancements, from data centers to advanced computing. Credo Technology, specializing in high-speed connectivity, is equally vital, enabling the seamless flow of data that AI systems depend on. Their reports will offer insights into the supply chain's health, the pace of adoption for new AI technologies, and the overall profitability of AI-driven business models. Investors will be dissecting every number, every forward-looking statement, searching for clues about future growth, competitive positioning, and the sustainability of current valuations. The results from these companies will not only impact their own share prices, but could also influence broader market sentiment towards the tech sector, especially given the significant weight AI now carries in major indices. This is a pivotal moment, where the abstract promise of AI meets the concrete reality of quarterly financial performance, making these earnings a must-watch event for anyone invested in the future of technology. Will the AI stock rally continue its unstoppable march forward, or will these earnings reports bring a dose of reality to the market? Hold on tight, because the market's next big moves are being written right now. Next, we're diving into the crucial economic data that could sway the Federal Reserve's next big decision. Jobs data and Fed moves, the economic crossroads. The economic landscape is constantly shifting, and the upcoming week promises to be a critical juncture, particularly for understanding the Federal Reserve's next moves. All eyes are on the latest U.S. jobs data, which will serve as a key barometer for the health of the American economy and a significant influence on potential interest rate decisions. Following a disappointing July non-farm payrolls report and a notable executive change at the Bureau of Labor Statistics, the August data will be scrutinized with unprecedented intensity. Traders and investors will be poring over every detail to gauge the labor market's strength and its implications for inflation and economic growth. The unemployment rate, wage growth, and job creation figures will all be critical inputs for the Federal Reserve as it weighs its monetary policy strategy. A weaker-than-expected jobs report could bolster expectations for an interest rate cut in September, a move that could provide a significant tailwind for stock markets. Conversely, A stronger report might dampen those hopes, potentially leading to market volatility. Beyond the headline numbers, analysts will also be looking closely at any revisions to previous month's data, which have recently shown a more significant downward trend than anticipated. This sensitivity to the jobs data is amplified by the ongoing debate about the pace and timing of potential Fed rate cuts, a topic that has been a dominant theme in market discussions. The market's confidence in a September rate cut has fluctuated, with probabilities shifting based on incoming economic indicators. This makes the August jobs report not just a snapshot of the current labor market, but a potential catalyst for significant market movements. The interplay between employment figures, inflation expectations, and monetary policy will be central to understanding the market's direction in the coming weeks. But the economic story doesn't end there, it's all connected. We're also uncovering a company strategically positioned to win big on multiple global trends. The AI energy play, a hidden infrastructure giant. Artificial intelligence is not just transforming industries, it's creating an unprecedented demand for energy, posing a significant challenge to existing power grids. As AI models become more complex and data centers grow exponentially, the need for reliable and abundant electricity is reaching a critical point. This burgeoning energy crisis is creating a unique investment opportunity, particularly for companies that provide the essential infrastructure to support this AI-driven surge. One company, often overlooked by the mainstream AI investor, is strategically positioned as a potential toll booth operator in this booming energy market. This firm is not a direct AI developer or chip manufacturer, but rather a critical enabler of the AI revolution by owning and operating essential energy infrastructure assets. Its business model is built around capitalizing on the massive electricity consumption of AI data centers, which are already straining power grids and driving up energy prices. The company's positioning is further strengthened by its involvement in other major economic trends. For instance, as geopolitical shifts and trade policies encourage onshoring of manufacturing, this company is poised to benefit from the rebuilding and retrofitting of industrial facilities. Its debt-free status and substantial cash reserves provide a strong financial foundation, allowing it to invest in new projects and weather economic uncertainties. Furthermore, a significant equity stake in another high-growth AI play offers investors indirect exposure to multiple AI growth engines without the premium valuations often associated with direct investments. This unique combination of AI energy infrastructure, onshoring opportunities, a robust balance sheet, and diversified AI exposure makes it a compelling, yet under-the-radar, investment opportunity. While many are chasing the flashy AI tickers, savvy investors are quietly recognizing the foundational importance of energy infrastructure in the AI era. This company's ability to tie together AI, energy, tariffs, and onshoring trends, all while maintaining a low valuation and a strong financial position, presents a rare chance to invest in the backbone of the next technological revolution. This company is quietly powering the future, but what about the companies consumers interact with daily? Get ready for a look at how retail and housing sectors are navigating new challenges and opportunities. Retail reshuffles and housing hurdles. The retail and housing sectors are navigating a complex economic environment, with consumer sentiment and broader economic uncertainty playing significant roles. In the retail space, attention is turning to companies like American Eagle Outfitters, which is making strategic moves to capture consumer interest. Following a recent campaign that faced some backlash, the brand is now collaborating with a high-profile athlete, aiming to reignite excitement and boost sales, particularly within its denim line. This move comes at a time when the company's stock has seen a year-to-date decline, highlighting the challenges in the sector, including the impact of tariffs and shifting consumer preferences. Analysts are closely watching how these brand collaborations and marketing efforts will translate into actual sales performance, and whether they can offset the pressures from an uncertain economic climate. On the housing front, companies like Berkeley Group are facing headwinds common to the sector. Despite an ambitious strategy and a focus on the higher-end market, the cyclical nature of the industry, coupled with elevated interest rates and affordability concerns, presents ongoing challenges. While the company has a strong forward order book and a healthy net cash position, providing some visibility and financial strength, the broader economic environment continues to weigh on potential buyers. The housing market sensitivity to interest rates and consumer confidence means that even well-positioned companies must carefully manage expectations and adapt to prevailing conditions. Investors will be looking for updates on how these companies are managing inventory, adapting to consumer demand, and navigating the macroeconomic landscape to ensure future growth and profitability. The performance of these sectors offers a crucial glimpse into consumer spending habits and the resilience of key economic industries. These are the stories shaping today's market landscape. Stay tuned for a rapid-fire recap and your next steps to stay informed. And that's a wrap on today's Market Pulse. We saw Broadcom and Credo earnings set to test AI stock momentum, crucial U.S. jobs data on the horizon that could influence Fed policy, a hidden infrastructure play poised to profit from AI energy demands, and key updates from the retail and housing sectors. Don't miss out on any of these vital updates. Hit that like button if you found this valuable, subscribe to Qualcomm Pulse for your daily dose of market intelligence, and ring that notification bell so you're always the first to know. Plus, let us know in the comments which story you're following most closely, and give us a follow on all our social channels to keep the conversation going. We'll see you next time.